Markets are shifting gears again. The dollar stands ready for liftoff, volatility is cooling off, and the bond market just flipped a major signal that could hint at rate cuts ahead. From commodities to currencies to indices, it's all about recalibration, and we are tracking every move. And today we start our strategy section with the volatility index, as usual. So what we are seeing in volatility closure on Friday. So Friday, the index itself and the futures closed with a fairly strong bearish Harami candle. So if this candle is confirmed in the next couple of days, and it often comes with a higher high before the confirmation, then we would be looking for a calming period for volatility. If we look at the weekly frame, it's not that simple. Volatility index shows that it's a bullish candle, but the volatility futures are not there yet. So this potentially could be viewed as an inside candle with the chances, better chances for volatility to move lower. So it's a 50-50 chance for the next week, and we'll see what happens in the next couple of days. I think that Monday, Tuesday will be critically important, and I am planning to post daily reports on volatility if we see very interesting development. So now let's move on to the dollar index. So what we are seeing here is the dollar is fully bullish, and now it backtested the 200 days moving average, the red line here on the daily frame. The weekly closed with a strong bullish engulfing, and a freshly made 8x20 EMA weekly bullish cross just reinforces this move. If the momentum holds for next week, then the monthly closure will be strongly bullish. If we look at the long-term chart, the one that we are tracking since November, this is the last version of it, since November 2023, that's right, for 2 years. Nothing changed here. Now we have a potentially strong bullish flag here, and this would be the next target for the dollar. And if we look at this flag closer, potentially it's already forming a double bottom. So that's what we are seeing right now, and the dollar is exceptionally bullish. Now let's talk about the yen technical analysis and the carry trade. So what we are having here on the daily frame, yen dollar lost to yen with a bearish engulfing. However, we are yet to see it confirmation, because the weekly frame closed with a strong bullish continuation candle, and we are expecting a continued move higher, although it might have a little pause. And the monthly so far, after a very strong bullish October, it is tracking for a bullish November. The chart that we are tracking for 2 years, again from November 2023, this is the original chart, remain practically unchanged, a little tilt for the channel, but other than that, we are expecting yen to continue losing to its greenback counterpart. If we look at the US dollar, Canadian dollar exchange rate, so I would say that Canadian dollar is grossly bearish, and the US dollar gains strength against the Canadian counterpart. So the daily and the 3-day closure is bullish, weekly is bullish, and the monthly is on track for another bullish closure. This is the chart. Again, so one of our longest chart. We are tracking it since October 2021, which was this one. And now it obviously evolved a little bit, and now practically the targets remain the same, and at the same point I am expecting US Canadian dollar paying 1.5, 1.7 Canadian dollar for the US one. This is a very unfortunate news, but what you can do. And this is the chart for traders who prefer to track it in a different way, Canadian to US dollar. This is the target for wave 3. That's how we are seeing it right now. So, but this is the quarterly chart and it moves very slowly. Now let's talk about the bond market. An interesting move across the curve last week. We see a strong bearish engulfing for 2, 5, 10, 20 and 30-year yields. So generally it means that we are looking for further reduction in the rates and potentially a rate cut in the next Fed meeting on December 10th. Now, if we have a look at the candles for the 10-year yield, we see a bearish closure here. 10-year, 10-day frame, it failed to form a bottom and now it is potentially facing for another low. If we look at the monthly closure, it's very interesting one. So generally, in order to form a strong bearish candle, the monthly needs to close below the October low. Let's see if it is possible in the next week, and we have an incomplete week. So let's see what happens. If the rate closes above the October low, it would be potentially bullish formation with a perspective of moving higher. So an interesting position here. This is the chart, the long-term chart we've been tracking for 3 years, since December 2022, after an impulsive wave up. So this is the original chart. So we had an impulse, a clear impulse completed for wave 1, and now we are looking for wave 2 to extend. It might go slightly downward or horizontally for a few years. To be honest, let's see how it develops so far. So this is the spread 10-year minus 2-year. So far, we are not seeing any strong moves towards reversal, and the spread continues to move higher, to expand, and generally it means that the economy is getting healthy support from the bond market. Now let's have a look at the Canadian bond. So it's a very interesting one. So we are seeing this could be a bullish engulfing on the monthly frame. So if it indeed happens, then we like to say that the Bank of Canada is almost guaranteed to raise the rate on the next meeting on December 10th, which is the same day that the Fed's announcement. That would be a very interesting situation. So we are looking closely at what will happen here. So that's all about bonds and yields. Now let's talk about the TLT, the main ETF tracking bond market. So what we are seeing here, a very interesting closure on the weekly frame, just 1 basis point above the previous week open, which means we have an inside up candle, which is an equivalent of bullish engulfing. Very good chances for TLT to move higher, regardless of this candle here on the daily frame. Another interesting moment here, that on a 10-day frame it failed to form a top, and now it has better chances to continue upward. The monthly frame is yet to be decided. So far it looks bullish neutral, and if we look at the Elliott waves, this is the critical level that we've been discussing for a while, 88.44. So if TLT breaks this one, then the impulse upward will be invalidated. If it holds, then we would be looking for potentially wave 5, and it might be quite interesting one, so like 5-6%, maybe even more. And if you're interested in a bigger picture, I would encourage you to have a look at our website investingangles.com, where we regularly post TLT analysis, TLT weekly reviews. Now let's have a look at the commodities section. By the way, yesterday we posted the BDI, Baltic Dry Index analysis, which is very important for the market readings, and it is available only to the subscribers at our website. Now let's talk about the commodities. Again, a little excerpt here. So this is natural gas. Natural gas closed the weekly frame with bullish intent on the daily frame, on the 3-day frame, so clear cancellation of bearish odds here. The weekly, however, is somewhat neutral, and we might see a horizontal move or slightly downward until this neutral candle, potentially a bearish one, resolves. And if it holds at this point, then 15-day frame is bullish technically, and we are looking for another move higher, perhaps in the next 2-3 weeks, while this medium frame weakness is resolved. Speaking about the chart, so this is our chart that we've been discussing, tracking since September 23rd, and we said this is going to be a bottom here. Well, since then, natural gas added over 50%, and this is September 23rd call. And I'm right now looking for potential wave 5, and so far this now at the micro level, it's not very clear, the situation here. Clearly that the wave is corrective downward, and upward it's yet to be confirmed. And the possibility here is an alternative 4, a bigger wave 4, before moving upward for wave 5. Well, that's the perspective for natural gas, and if you're looking for a bigger picture, we strongly encourage you to have a look at our weekly report, and especially the monthly report, which will have much more information next week after the monthly closure. Now let's talk about wheat. What we are seeing here is we have a potentially bullish closure here on the daily frame. Weekly is clearly neutral, sitting on the 50-week moving average, and the marginally flipped 8x20 EMA weekly bullish cross. So these are good signs, and the chances for the bulls are preferable here. The 15-day frame closed with a bullish candle, and the monthly is also on track for a bullish closure after a bullish engulfing in the previous months. This is the long-term chart that we've been tracking since August 2022, and we identified this July 24 target area bottom, and wheat perfectly hit it right on time and right on track. After that, it tried to form a bottom and as an ending diagonal, and now we are looking for a wave upward. This is the one that we are discussing for a while. This is the call on October 19, when wheat was 504, and right now it added to the highest point about 11%, but right now it is retracing. So I'm looking for this wave as a very clean impulsive wave, potentially wave 1, and this is potentially wave 2. If it makes a clear impulsive wave upward, then we would be looking for wave 3 towards 600 or even higher. However, the wave 2 could be extended a little bit, like I mentioned here. Could be a zigzag for alternative 2 before we are looking for the next move higher. So that's wheat, and that's natural gas. If you are looking for gold, silver, oil, and other commodities, we are covering them in depth in our written reports on the website. Now let's talk a little bit about the stock market. And we will discuss today only Russell. So what happened to Russell on Friday? On Friday, it formed an strong inside up candle, which is an equivalent of bullish engulfing, and it pushed the price above the 100 days moving average and also above the 8 days EMA. So I'm considering this a very strong potential reversal combo. On the 3-day frame, it's also a bullish engulfing. So we have a very strong bullish move. On the weekly frame, an interesting thing that last week we discussed a failed structure, a failed combo of 3 black crowns, and now we have a potential confirmation. So the last 3 candles could form a ladder bottom, and if it is confirmed next week, we might see a strong bullish move. If we look at the Elliott waves, this is my latest chart. So our latest call on Russell was on June 9, and since then Russell has been moving up, and the recent consolidation or correction might be over now. So let's see what happens next. If this chart plays, then we are looking for a significant rally in the next couple of months. This is the chart. This is the wave of the bottom on Thursday. This is a clearly impulsive wave, potentially wave 1 here, maybe wave 2 slightly bigger for the next day or 2, and a continued rally. Another option that this could be, this top on Friday could be just wave 3, and we would be looking for wave 5, and only after we might see wave 2 consolidation for several days, maybe a week, and wave 3 would start sometime at the beginning in December. And this is the most interesting part of Russell. So this was our call on June 9th. So a clean inversed head and shoulders, and the target. So this is what we shared with our members. This is what we got later. So this is the original target, but it's not everything. So in the middle of it, on August 10, we identified another leg for this one, and even bigger head and shoulders, inverted head and shoulders, with this particular target 29.30. So this target still stands, and it looks like there is a chance that Russell is completing or already completed another flag, which would give us the target 27.15 in the next couple of months. If this flag is confirmed in the next couple of days, I would say that Russell has a very good perspective to rally about 15, 17, 20, even 20% by February. That would be quite a rally. Well, that's for Russell. That's it for Russell. We will post later our analysis for Dow Jones, Nasdaq, and S&P 500 on the website. And the final special for today, I'd like to talk about Apple. So Apple closed the day on Friday with a bullish engulfing, strong bullish engulfing. It's a consolidation, bullish consolidation candle on the weekly, and it's a failure, bearish failure on the 8-day frame. Potentially just a trampoline for jumping higher. So if everything goes well, Apple is going to close November with a bullish monthly candle. So this is the chart that we shared with our members on July 20th. On July 20th. This is the chart. Chart remains the same, and I am still tracking a couple of different counts here. So far, Apple added 28% since the call on June 20. So whoever jumped on board must be very happy. Now, if we look at the chart on the same chart, but the smaller timeline, the daily chart, this is the same one that we shared on July 20th. So far, we have a nice hit into the target area, and I would be looking for wave 5 of 3 for Apple to continue higher, and this would be a rally of about 10% in the next couple of months. So far, Apple is bullish, and it's on track for closing the month on the bullish note. Now let's talk about our swing room. On November 17th, our live trading room stayed in cash, a rare pause after months of precision calls. Since inception in January 2023, the room more than doubled, 107%, its unleveraged SPY portfolio, while the S&P 500 gained only about 70%. So this is our 107 as of this week, and this is the dashed line is the S&P 500. All credit goes to Master David, whose disciplined strategy continued to outperform. No leverage, no noise, just clean strategic execution. And now let's wrap it up. This week's strategy picture paints a fascinating contrast. Volatility signals a calm period ahead, but the dollar index looks ready to surge after confirming a strong technical base. The yen continues to weaken, and the Canadian dollar faces even more bearish pressure if it loses ground to the greenback. Meanwhile, the bond market flipped fully bearish, suggesting that next policy phase may include rate cuts sooner than expected. If the critical levels for TLT holds, the ETF could shine midterm. On the global trade front, our Baltic Dry Index review hints at resilience, possibly the start of another freight surge. Read the details on the site. In commodities, natural gas continues its climb. Heating bills won't be getting cheaper anytime soon. Wheat looks ready to make bread lovers pay more as prices rise. The rest, gold, silver, oil, and other commodities, are covered in depth in the written reports on our site. On the equity side, Russell 2000 shows early signs of a bottom, while Apple appears primed for another leg higher. Detailed midterm forecasts for Nasdaq, Dow Jones, and S&P 500, along with high-quality charts, are also available in the weekly written analysis. Remember, this video is only a snapshot. The full strategy, sector deep dives, and precious metals analytics are reserved for members on investingangles.com, as well as the daily special calls with Mr. Kyle. If you are new, start your 7-day free trial today for access to premium insights, trade signals, and daily setups in our Discord community. Check the advertisement videos for the special code. Like, share, and subscribe, and stay ahead of the crowd. At Investing Angles, We chart the charts before the crowd even blinks. Thank you for watching.